Stop. Before you scroll, do you know what happened to your money this morning while you were asleep? Here's a question Wall Street isn't asking. What if the most dangerous target in the Middle East isn't an oil field? It's a water pipe. Because right now, Iran is something pointed at the Gulf that's more terrifying than a missile aimed at a refinery. And when I tell you what it is and what it means for your retirement account, you're going to want to sit down. There's a chain reaction already in motion. It started in the Persian Gulf. It's currently running through Tokyo. And the final link in that chain is sitting in the US Treasury market. It's $1.2 trillion of it. Stay with me because this is where it gets real. Everyone is watching the Strait of Hormuz. Tankers, oil shipments, energy supply, and yes, oil just blew past $110 a barrel when markets opened. Don't forget to subscribe and share your thinking. That matters. But here's what you're not being told. 99% of Qatar's drinking water comes from desalination plants. 90% of Bahrain's, Kuwait, Oman, Saudi Arabia, all above 70%. Even the UAE, the most diversified economy in the Gulf, still sits at 42% water, not oil, water. Gulf countries don't just need energy to run their economies. They need desalinated water to keep people alive. And Iran doesn't need a nuclear weapon to threaten that. They can hit the power grids that feed those plants. They can attack the pipelines that run the facilities. They don't even need to blow up the treatment units themselves. Take out the water and you don't just crash an oil economy, you crash a civilization. Now here's where most analysts stop. They zoom in on oil. They argue about Hormuz. They model $15 a gallon gasoline and call it a day. But I want to take you somewhere else because the real-time bomb in this crisis isn't in the Gulf, it's in Japan. Japan, America's closest ally in Asia. Japan, a country that cannot produce a single drop of its own oil. Japan, which just watched its stock market drop nearly 5% in a single session. Japan, which is sitting on $1.2 trillion of US Treasury bonds. In Japan, which is being backed into a corner right now by a crisis it did not start and cannot control. Here's the math, and it's brutal. The dollar index just spiked 3% as traders ran to safety. Every other currency on earth got hammered, especially the yen. Meanwhile, oil prices jumped 50% from where they were. Now think about what that means for an island nation that imports nearly every drop of fuel it burns. Brent crude might be $112 to the rest of the world. But because the yen is collapsing, Japan is effectively paying $130, $140 a barrel. Their currency is broken. Their energy bill just exploded at the same time. Japan's forex chief just went public with a warning. The worst is not behind us. If the yen keeps falling, and we're already back at the psychologically devastating 160 yen to the dollar level, ordinary Japanese people are going to get crushed. The government says they're ready to take all necessary measures. That's diplomat speak for we are about to do something drastic. Here's the trap Japan is caught in. To defend the yen, you'd normally raise interest rates. But Japan can't do that. Their debt is so enormous. Debt servicing costs alone are expected to hit 41 trillion yen by 2029, that a rate hike right now would light the whole thing on fire. Just the interest payments would eat 30% of the entire government budget within 3 years before this crisis even started. So Japan can't raise rates. They can't let the yen die. They can't just sit still while oil eats them alive. There is only one move left. Japan sells its US Treasuries. $1.2 trillion. The largest single foreign holding of US government debt on the planet. It's larger than it was 6 months ago because the Bank of Japan was actually adding to that pile heading into this crisis. And if Japan starts selling, even a fraction of it, here's what happens to you. US Treasury prices drop, yields spike. The 10-year yield is already sitting at 4.41%. The last time it crept above 4.6, President Trump buckled on the trade war. But only after markets had already collapsed 15 to 20%. The administration knows exactly what that level means. Higher yields blow up mortgages, car loans, credit card rates, and corporate borrowing costs. A recession doesn't come with a press release. It comes with a quarterly earnings report that's suddenly a lot uglier than anyone expected. JP Morgan already ran the numbers. If US crude hits $120 a barrel, inflation jumps 2%. GDP contracts 1.25 to 1.5%. At a 15% stock market drop, which, let's be honest, is already in progress, and you're looking at a GDP hit approaching 3%. That is not a slowdown. That is a recession. This isn't abstract geopolitics. This is the price of your next tank of gas. It's the interest rate on your next car payment. It's whether your 401k ends the year where it started. The administration knows the oil price is the choke point. That's why Treasury Secretary Bessent quietly lifted sanctions on Russian oil. That's why they're letting Iranian oil flow back into global markets even while striking Iranian facilities. The verbal gymnastics are something else. You're jujitsuing them, Bessent actually said, using their own oil against them. But there's a limit to how long that works. There's only so much spare oil supply in the world. When it runs out, persistently high energy prices become the new normal. And that's when Japan smashes the glass box. Look, I know this is a lot. When I started pulling the threads on this story, I did not expect to end up connecting Gulf water policy to Japanese debt to US Treasury yields in the same breath. But that's how these crises actually work. They don't respect asset classes. They ripple. The ripple always reaches retail investors last, after the institutions have already repositioned. That's why I do this. Because you deserve to see the full board before the next move is made, not after. And I'll be straight with you. A full Japan Treasury dump is not a certainty. It's a risk. Serious, underpriced, underreported risk, but not a foregone conclusion. The yen carry trade that could unwind alongside it. Estimates range from $260 billion to over $1 trillion in exposed positions. Nobody actually knows how big the time bomb is. That's the part that should concern you most. What we do know is this. The longer the energy crisis drags on, the more likely Japan is forced to act. And if they act, every American investor will feel it. Here's the thing. This isn't one story. It's 5 stories happening simultaneously. And mainstream finance is only reporting one of them at a time. We covered Japan today, but the yen carry trade unwind doesn't happen in isolation. It collides with a Federal Reserve that hasn't taken rate hikes off the table because inflation is still stubborn. It collides with the Treasury Department quietly shifting to short-term bonds to hide the true cost of U.S. debt. It collides with the Pentagon asking for an additional $200 billion for a conflict nobody is officially calling a war. Every one of those threads has a direct line to your wallet. That's what this channel is about, not the headline. It's the thread underneath the headline and exactly where it leads. If today's video opened a door for you, good. There's a lot more behind it. Subscribe to What Changes and hit the bell because the next video connects all of this directly to the... Don't forget to subscribe and share your thinking.